Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. In this video, we'll take a look at the US inflation data due the third week of each month. In March, the data will be released on March the 24th. The inflation report is known as a Consumer Price Index, or CPI. There are two parts of the report. The Core Consumer Price Index measures the changes in the prices of goods and services, excluding food and energy, and the CPI measures price changes from the perspective of the customer. It's a key way to measure changes in purchasing trends and inflation. The difference between CPI and PCE seem relatively insignificant. However, a big issue is the difference between CPI and Core CPI. Inflation is something that affects all of us. It erodes the value of your money. Indeed, when prices go up, your purchasing power goes down. When wages are stagnant, as they are now, inflation can be even more of a problem. As prices rise, many expect monetary policy makers to do something about it. However, policymakers don't rely on CPI for their decisions. Instead, many concern themselves with core inflation, which is a different matter. One of the reasons food and gas prices are left out of the measure of core inflation is because they're a bit more volatile than the prices of other categories. In order to get a smoother trend line for monetary policy purposes, analysts use core inflation. However, for regular folks, the situation doesn't always reflect what's happening in their lives. This month's report might get less attention, as the FOMC's meeting is the previous week, so the data will not have much effect on the central bank. Analysts think the committee will maintain its view that inflation will gradually firm towards 2% over the medium term as the economy improves and the transitory effects of lower energy and other factors fade. We do not expect the statement to introduce downside risk to inflation from a stronger dollar, since doing so would likely lead markets to infer that June rate hikes are off the table, something we don't believe the committee intends to communicate at this stage. Last month, economists surveyed by the Wall Street Journal had expected prices would increase by 0.3% and core prices would rise by 0.1%. The stronger US dollar appears to be suppressing inflation. Prices for goods outside of food and energy dipped 0.1% in February, a direct result of lower prices for goods for export, which plunged 0.8%. Broad US inflation gauges have moved lower in recent months, due in large part to falling prices for gas and other petroleum products.